It has just struck 12:04, so hopefully I'm fashionably on time for me. So if you can hear me, I can see a few folks. Everyone's already in the chat. Paul, uh, Basti, Chris, Vin, Joel, Graham, Patrick, Sheila, Caroline. So many people. It's so wonderful to see you all. 12 p.m. on a Thursday. So we've got a bit of a special session today. We missed last week because I was about this deep in what part of our rebrand and our overhaul at Rask. So I'll talk a little bit about that today, but it's the first week of the month. So what that means for us here at Rask Invest Live is that we get to talk about our portfolio. Hey, Marco. What's going on, Logan? Good to see you. And so we are going to keep building our portfolio. Now, before I get to that, they say that we cannot make personal financial recommendations or those types of things on a live show such as this. Now, if we're in the United States, maybe we could do that. But here in Australia, I cannot give you personalized recommendations when it comes to financial products. However, what I can tell you is that this is, where is it? By far the best purchase I have made on Amazon recently, and I can highly recommend this to anyone that drinks black coffee. It is currently 34% off. If we are on a finance show, I would say that that is deeply undervalued. It is a lightning deal, according to Amazon. It is a lightning deal. So I'll put this link in the live chat here. You can see it now coming through. Whoa. It is a black coffee maker. It's for coffee drinkers like myself who like black coffee as much as we like it with milk or soy milk or almond milk or whatever it is that you're drinking. And it's only $59. I like this coffee machine so much. I asked for it for my birthday, but not only that, I bought 3 more. So it's one of those things where you can just go to Amazon and whatever gets good reviews, you can just buy. It's one of those things. So if you do like coffee at home, you could buy a Breville like this one here, the advertisement, good on your Breville, and spend $3,100. Yeesh. Or you could try this for $59. Take it on my recommendation that it's pretty good if you like black coffee. It's filtered coffee, it's smooth, and you can just buy the coffee beans wherever you're at. So that's my only personal advice for today is buy this coffee machine. The rest of it is strictly general in nature. So I do have some slides, and where are they, Owen? I've got them. Here we are. I'll just get rid of that one so I don't confuse myself again. That's me in a flanny. So that's that. But Rask Invest Live every Thursday at 12 noon. That's Eastern time. Fun, free, practical, no fluff. It did have BS in there, but I took that out. I thought it would be more on brand. It's available on replay. You can use the same link. If I drop some nugget of wisdom in the next hour, you might be able to rewatch it using the same URL. You can join the free RAS community, which is where we take a lot of questions and get ideas from. And it's not just for paid people. Obviously, it's totally free. Our show partners, Pocketsmith, Perla, Navexa, and Superguide. You're going to hear from Perla later this month. We've got Anna Christina on the show. You probably see that we track our portfolio, the Rask Invest portfolio, the Rask Invest Live. I'm just going to log out of my WordPress here. 1 second. Get out of that. And if you go to RAS Media /live, you will see, and I'll just make this a little bit bigger. There we go. You will see, this is the old version of it. You will see that the fake news portfolio is right here. According to Navexa, which is the tool we're using to track the portfolio, we can see modest returns from AAA. We can see our Home Depot investment is up 9.07%. A lot of our Aussie stocks are down. Overnight, you might have noticed, US presidential election is done and dusted. Donald Trump is the president for the next 4 years. So we saw the S&P 500, if I just bring that up 2.5% overnight. They're saying that what this would imply is that investors, for whatever reason, think that President Donald Trump, US President Donald Trump, would be a better fit for the stock market and pro-business. Maybe they're right. Maybe they're wrong. I don't know him that well, so I don't really have an opinion on that. But What I can say is that have you subscribed? I know I have it on high authority that if you subscribe to the RAS YouTube channel, enlightenment will come to you. You can guarantee that. That's a promise. My old mentor said that a promise is the cheapest form of a guarantee. So I can guarantee that enlightenment will come to you, at least financial enlightenment. If you subscribe to the RAS YouTube channel, you'll get podcasts each and every day. So check that out. Um, Owen in a flanny shirt, says Mike. Man of the people. He must know the price of a loaf of bread. Oh, Mike, that's really good. That's really good. Thank you, good sir. Man of the people. Yeah, maybe. Maybe. I actually have this collared shirt on. It's from MJ Bale. Not like upmarket, but it's not necessarily Connor. Um, it's a decent shirt, but I only buy about one every 2 years, Mike. So you can have it on authority that I do know the price of shirts, and I don't spend a lot of money on those. Do spend it on coffee machines though. So I thought something that would be interesting. I was lying awake in bed this morning. I was thinking, you know what? I say a lot of things to a lot of people, and with the whole RAS rebrand that we're going through right now, it might be interesting to everyone to actually understand what the RAS community looks like. So um, these numbers fluctuate pretty significantly. It depends how you define what it is that we do and how we do it, but a lot of people interact with Rask in different ways. And the thing that I'm always amazed about is that people that take a course, so if you're one of the 31,000 people that have enrolled in a free RAS course, um, a lot of those people don't know that we have an investment news website where you can go to every single day and you can get investment news. Like a lot of people don't know that this website exists if they're a student on the education side. And a lot of people here don't know that our courses exist on the education side. So it's like kind of like, and if you've listened to our podcast, you may not know the live show exists. So as part of this rebrand, what we're trying to do is make sure everyone's aware of the different things that we do because we do so much. It doesn't actually change anything that we do. We're just adding things, but it's a cool thing. Anyway, I just thought this would be interesting to a lot of people to see that. We've got 50,000 people now hold accounts on RAS. You can see the different podcasts that you might already listen to are now available in new style and color. But this one here, this is actually the live show that I'm doing right now. It actually gets turned from a video recording on a YouTube recording, gets put over onto Apple Podcasts and Spotify. So if you wanted to capture this conversation in audio only while you're on the go, for example, you can subscribe there too. And that's completely free, of course. The thing that people know about us is that we're not just here to try and make as much money as we can as quickly as we can. It's far from what we do, actually. I would say that businesses that are way smaller than ours make probably 10 times the amount of profit every year as we do. But what we do is we try and invest as much of our people's time, effort, and money back into free education for Australians because that's why I started the business in 2017. And the way we make money at Rask is there's advertisers on our podcasts. We are now making more money through our partnerships with like accountants, financial advisors, a mortgage broking joint venture with Flint Group, and these types of things. And then we're going to start doing more in the future, which I'll share with you towards the back end of today's show because I don't want to bore you to death with this. But the number one goal for me and for the team at Rask is to get 100,000 families into free financial education. It's a bit of a vanity thing. It's like artificial. It's probably not vanity. It's just an artificial thing. But we want 100,000 and we're 31% of the way there. I know that math because we've got 31,000 people that have enrolled now. But that's the goal. So if you can help out in any way, please let us know. Now, we've got our general advice warning before I get into the stocks. It's going to be heaps of fun. I don't know your needs, goals, or objectives, so please do not act on the information that you hear in a RAS podcast or even here on the live show because I don't know your circumstances. That's where you need a financial advisor who can take into account all of those things for you. If I mention things like ETFs, super funds, bank accounts, they may come with certain legal documents. For example, a super fund or an ETF would come with a product disclosure statement and a target market determination. And you can read that and you should read that before investing. or acquiring, as they say in finance, that financial product. We also have a terms and conditions, and our financial services guide is always available on the RAS website at rask.com.au/FSG. The name of this show is called Rask Invest Live, but we also have another thing called Rask Invest, which is where we invest for people like myself. We invest for our community now, and we've just shot through $10 million that we manage for our community, and that's growing rapidly, which is amazing and it's incredible, and I'm just so appreciative of that. And I know Mitchell is who heads that up for us, but we are super appreciative of that, and we can see that growing for the next 10 to 20 years, hopefully. So I'm really excited about that. But that also has a PDS and a TMD that's available at rask.com.au/raskinvest. So on today's live show, we're going to talk about gold ETFs. We're going to talk about FANG. We're going to talk about Nvidia, which became the world's biggest company in the past week. So Nvidia is now the world's biggest company. And we're going to talk about Washington H. Soul Pattinson. We're getting a lot of questions on that. So I thought we would talk about that. I'm just going to log into Navexa. So Navexa, let me just bring this up here if I can focus on more things than one at a time. Here we go. Go in here, put my password in. You can copy that if you like. Caroline, you said, loving the rebranding. Looks fantastic. Thank you so much. Morning, coach. Good to see you, Steve. So, would it be evening to you, Steve? Last time we spoke here on the live show, you were kind of waking up when everyone else was, well, you were going to sleep when everyone else was awake. So I just want to make sure that I've got my time zones correct. But anyway, we can add positions to the Rask Invest Live portfolio, and we can add certain things here too. Tim, you said $10 million means you have 6 times the FUM of GlobalX GARP. Well, yeah, we'll get to that tonight because we did air an episode recently on that. GARP's the new ETF from GlobalX. So we can add and we can track the portfolio here. Raskin core members will also know that we track our ETF portfolios in here too, so you can follow along. But we can see that the currency gain on Home Depot, which we added a few weeks ago, has been pretty good. Because it's in US dollars, we've benefited a bit just from having US dollars. The ETF, the AAA ETF, there was a good post about that this week in our community. That's the cash ETF. This is the bond ETF that we hold at Rask Invest as well. Wesfarmers, which is diversified, owns Bunnings, that sort of thing. WiseTech suffered when its CEO had a bit of a PR issue, shall we say. I'm curious, did anyone here, because I know there was a lot of chat about it in the community, did anyone here take the opportunity to buy WiseTech shares? So WiseTech being the software company, probably the most successful, other than Pro Medicus, it's probably WiseTech and Pro Medicus, Objective Corp, probably the 3 most impressive technology companies on the ASX right now. Did anyone take an opportunity to buy WiseTech? So it fell here to under $100. Did anyone buy it? I'm curious. Okay, and tired, Steve, you've got a day off. Good to hear, my friend. Good to hear. So we probably should have topped up into it in the Rask Invest Live portfolio, but I skipped the bloody live show last week. So we could have topped up. That was exactly what we were waiting for. You might remember we only put $5,000 into it because we were like, it's pretty expensive. We'll hold off until a pullback. Then it pulled back. Then we skipped the live show and we should have bought it. So there we go. At least you sold yours. I'm curious. Why did you do that? Julie, you did buy some. That's fantastic. Good on you, Julie. Graham bought some for super, but missed the $99. That's fine. I think that's still commendable. So good job. This is not a recommendation for anyone to buy WiseTech shares. I'm just curious because it's obviously a wonderful business. I think if we just bring up a chart, let's see if we can go in here. I'm just using Google Finance for right now. Let's compare it to Xero, Pro Medicus, and this other company, Objective Corp. That's the one that I want. Let's have a look at them all over 5 years, see which one's the best. Over 5 years, Pro Medicus, surprise, surprise, is number one, 700%. Objective Corp, 244. WiseTech, Xero 100. WiseTech 350. This is obviously just in percentage terms. It's Google Finance, not dividends, not a recommendation. I do own shares in Pro Medicus, still own a very small amount of shares, which I'm very happy about. Every time I look at it, I'm like, why is it still going up like that? But anyway, I'm very happy for it, but yeah, it's put the profits into VGS. Oh, put the profits into the global Vanguard Global shares. Mr. Leftovers, you said you bought it when it was around $80 after watching the Richard White interview with yourself. Still holding it. Thank you, Mr. That is a good one. So Richard White, I copped some. Can I say this? Yes, I can. I copped some shit for doing this podcast with him all those months ago when all these scandals broke out. But you know what? I think that I don't know anything about his personal life, but what I can say is that a wonderful value creator with WiseTech, that's for sure. So you can go and check out that interview. I just put it in the chat now. Okay, so back to the task at hand. We should actually compare this to one of the companies that we're going to take a look at today, which is Nvidia. Does anyone here own Nvidia? I would be curious to know when you bought it, why you bought it. If you could chuck that in the chat. And while you're doing that, we can compare Nvidia to the other five stocks that we've put on this list, or 4 stocks here, and see that even though Pro Medicus is fantastic, as per Graham's comment, it has nothing on Nvidia at 2,700%. So 2,700%. Would you look at that? That is an absolute wild ride, and it makes Jensen Huang, the co-founder and president and CEO, I believe is the title, makes him a very, very wealthy person. If you haven't already checked this out, ladies and gentlemen, one of the things that I was thinking about in the lead up to today's show was this. You can actually go to the Forbes.com/real-time billionaires, and you can see how much people's wealth, according to Forbes, by the way, which is not necessarily that accurate, you can see how much their wealth has changed in one day. So obviously Elon Musk, being the biggest promoter of Donald Trump of any CEO I've ever seen, he's obviously benefited. His Tesla shares went up. Jeff Bezos reportedly may have also been supportive of the Trump campaign. And you can see a lot of these different CEOs on the way up. But there was one in particular, which is Jensen. The interesting thing about Jensen, who co-founded Nvidia, there's this story that I read about him. If we go down, look at all these ads. Get out of the way, please. If we go and we look at all, there's some interesting stats further down the page. There's this stat which I did not know. So Forbes says, "Did you know?" And it's got this information. It says, shortly after arriving in the US, Huang was sent to a boarding school in rural Kentucky for troubled youth by his aunt and uncle, who mistook it for a prep school. It goes on to say, at boarding school, Huang was assigned to clean the boys' bathroom every day after class, while his brother worked on the tobacco farm. Huang also worked as a waiter at Denny's, which he says helped him overcome his shyness. That sounds more like a labor camp than an actual school that his aunt and uncle accidentally sent him to. He actually migrated to the US. He was born in Taiwan, went to Thailand, I think, and then to the United States, which is, there's some irony in that, because obviously going from Taiwan, that's where we've got other massive semiconductor companies like TSMC and other businesses involved in making the GPUs and the graphics cards which Nvidia designs. So there's kind of this roots at home, if you will, for Jensen. But if we jump into the ticker terminal, I'll just pop in my password and username here. Feel free to just copy my password. If you can guess it, good on you. If we go to ticker, I know some of you, I'll just ask another question to you. Peter B said, I regret selling Pro Medicus at $45. Well, I feel you, because I sold it at $13 and I told our members to sell at $13. And then I sold again at about like $80. I was thinking about that today too, and I was thinking about it with Nvidia, because there's this wonderful podcast with David Gardner, Companies That Break the Rules. This is my favorite podcast episode of all time. So this is with David Gardner, who's the co-founder of The Motley Fool. He's since retired from stock picking, so to speak. He still hosts his Rule Breaker podcast with one of my favorite hosts of all time, which is Patrick O'Shaughnessy, the founder of Colossus and a few other things. And in this conversation, David explains why he bought Nvidia. So he talks about, I can't see it here. He talks about Nvidia and how they held it from like $4 to $40, back to like $10, then up to like $120, then back to $40, and now obviously it's gone on to do monstrous things. Thing to keep in mind when you look at Nvidia stock is when you look at the stock price, it's had a stock split. I think it was a 1 for 10 from memory. So meaning that for every one share someone held before, they have 10 shares now. People get concerned because they see a loss in their brokerage account for a couple of days until it's adjusted. But you have the same amount of share. You have the same amount of value. You just get more pieces of the pie, I guess. But what's crazy about this is if we go back to say, 2016, so 8 years ago, we can see that Nvidia shares were trading at a split adjusted rate under $1. It's now $145. Absolutely stupendous growth. Now, when David Gardner from that podcast was talking about it, I think he bought it or he recommended it to members in about 2004. So he would have held it from about 12 cents. Previously, he had bet on the competitor to Nvidia, which was 3CX. And then Nvidia acquired 3CX. And then he started owning Nvidia from that moment. But Nvidia started as a gaming card company. So if you used to have your old PC, you would grab a gaming, like a GPU. So that's like a particular part of the computer that goes alongside the motherboard, which is that big thing with all like the little wiring and things on it. You plug it into that and it allows you to play video games with better graphics and faster response times and stuff like that. And so nowadays, GPUs are in everything. They're in this phone, in this computer. However you're watching this, there is a GPU in that. They're in servers, they're in the cloud. And the reason why GPUs are so valuable is GPUs, otherwise known as graphics cards, graphic processing units, are different to CPUs. So CPUs, I'll just do a little illustration. I'll get my Mr. Squiggle out right here. So if we think about what a computer does, so actually let's call this processing, or actually we'll just go computing, something like that, right? So if we think about what a computer does, it uses a bunch of ones and zeros to make decisions. Now, in the case of this here, so we'll go GPU. This is a really basic thing, but I think it's important to understand how things work. So in the case of a GPU, this one here, and this is a CPU, what happens is typically when there's a decision made. So this is where the decision inside your computer is made. In a CPU, typically what they're really good at doing is taking one complex program and then running a million iterations every second and then getting the correct answer. Now, what's different about a GPU is a GPU is better at taking millions of little decisions, say, for example, analyzing a big data set as opposed to solving like an equation and trying to find a pattern in that. And then out comes the answer. So a GPU is more used for when there's lots of decisions that need to be made simultaneously, and a CPU is used when there's more complex decision making. So why these are valuable is obviously when you have AI like ChatGPT, Perplexity, Gemini, anything that requires a lot of data to be ingested at one time to make an answer, a GPU is far more powerful than a CPU. Now, so this is when you look at, for example, if you look at this new iMac that I've got here in front of me, and if you're a big gamer or something like that, you probably wouldn't go with this new iMac because just by itself, you can't extend the GPU. You can't put another GPU in it. You can't, really modify it and add more of the thing that's really valuable to gaming, which is a GPU. It doesn't do a lot of that. Some of the Macs are really good for it, but normally PCs are better. In the case of a CPU, these are still obviously required for complex tasks, but when you have a server farm, and some of you will be familiar, a server looks like this. They call it a rack. And then on each thing, they have what they basically have different forms of CPUs or GPUs, if we just break it down really simply. And what happens is all the cables plug into this thing in the back of the server rack, and then it processes decisions, and then out goes the answers. And that's what the cloud is. The cloud is just a collection of these things. And at the moment, to make it really easy for you to understand, Nvidia is the best company in the world at designing the GPUs that go into server farms. And those servers are used for cloud processing, for AI technology, and all that sort of stuff. So they're the world's number one at that. And Joel, you said, I own a small amount of Nvidia. I only bought it a few months ago. I have loved Nvidia since I was a kid, always purchased their GPUs. I think they will be an integral company in the AI boom. That's wonderful, Joel. And I kind of agree with you. They kind of already are, right? Graham, you said, I used to hold Nvidia, sold out at $186 in 2022 to reduce my mortgage. Well, that's a great thing about investing in companies like this, Graham, is you can do that. So why not, eh? Elise, nice question here. You've said, would it be wise to buy back into Wise Tech? Nice play on words there. T. Branson said, not Nvidia directly, can't be effed to do the international brokerage paperwork, deliberately holding in FANG Plus, as well as the MCCL, the Monroe Climate Change Fund, due to their Nvidia holding. So you're choosing to invest in Nvidia through ETFs and that sort of a thing. Mr. Leftovers, what are your thoughts on nuclear to power data centers in the coming future and uranium bull run as a result? It's really interesting. We got a question about this over on our Australian Investors podcast last week, Mr. Leftovers. So obviously I talk about all this stuff. Like I just gave a wonderful Mr. Squiggle presentation, I think you'll admit, on how a GPU works. One of the big problems with server farms and in particular, one of the big issues that comes with AI technology is you have to train your data. You have to train your AI models, and the data is what's really important. There was a fantastic post, I will say, in our community a couple of days ago, maybe it was yesterday actually. There was this fantastic post here by Vinoth. I'll pop that in the chat for anyone that's in the chat there. There was talk about how he was saying, he did two posts, and he was saying, he used a really good example here. Will Reddit continue to surprise the markets? And he actually used an AI summary in his post. But he says, what are your thoughts on Reddit's ability to grow? My opinion was the primary driver was the data deal with Google. Human-generated content is very valuable as this is being used to train foundational models of LLMs, large language models. There are also newer companies emerging that are creating synthetic data for training purposes, as the experts believe we will soon run out of data to train the AI models. In the age of AI, data is indeed the new oil, and Nvidia is the engine. The latest engine is Blackwell. So Blackwell's a type of server farm, if I'm not mistaken. So I think I've got it here. There you go. So Vinod summed it up brilliantly here when he said, data is indeed the new oil and Nvidia is the engine. So if you think Nvidia is the world's best company at designing GPUs and designing semiconductors and this type of thing, right? Designing the actual little things that go inside servers and inside your computer and all that sort of stuff. And it actually develops the code that goes to program them, by the way, as well, which is really valuable. What it needs and what the entire world needs if it's going to embrace more AI is the data to feed it. Now, to Mr. Leftover's point, the key thing is here is that when you put data into a model, is that data is extremely intensive in terms of the energy required to keep processing that amount of data. So remember how I said before, I showed in this Dr. Squiggle, I showed how there was like multiple things coming in to the box and then one thing coming out, which is probably like the inside, if you think about it like that. Imagine that this part of the equation, the stuff coming into it to train the model, is billions and billions and billions and trillions of different things and pieces of information that need to be analyzed. These can take months, if not years, to train the data to recognize certain things. And in the meantime, can cost hundreds of millions of dollars, if not billions of dollars, just to train the model. And so these are huge, huge responsibilities, like capital responsibilities. That's why companies like Google, Microsoft, even Apple to an extent, Meta / Facebook, Tesla, these companies have huge amounts of data. But the key thing that they also have is a huge amount of money to train new models. So you might have a new tool that comes along, a new AI tool, but none of them can afford to buy $200 million worth of Nvidia chips. And they can't afford to spend $5 to train a data center. They just can't, they just can't afford to do that. And so what they're looking for is they're looking for energy sources that can bring down the cost of that computing. And if we look to Mr. Leftover's point here, that's the wrong little widget. I need this one right here. Where am I? I don't want 1 day. I want, here we go. This is the price of uranium over time. And so you can see the price of uranium has been going up and up and up for a recent time. There was a very long stretch of time here, which is roughly, let's say, 10 to 15 years when people would have been a bit lonely, going to cocktail parties and telling their friends that they invest in in uranium. I don't believe that the best way to invest in any of these companies is through a commodity. So I don't believe that anyone should be taking a punt on any type of commodity price. The way I think about it is I would rather own BHP than own steel. I would rather own, Rio Tinto than own a piece of copper. I would rather own a gold miner instead of gold itself. Now, we'll come to that in a minute. There are other reasons you might own gold. But the point is that I would rather own something that has more control and is a bit more kind of able to benefit from the upswing in a bigger way, because it's quite risky to own commodities and to trade in these types of things. So I would say maybe there's a new energy source that helps the AI boom, but I probably wouldn't be banking on that. I'd rather own Nvidia or the FANG ETF or something like that. There is something I wanted to show you here. So I won't go into too much depth about the criteria that we're going to use to determine if this company should go into the portfolio. Because remember, a few weeks ago, we talked about how you can come to this page. I'll just pop it in the chat now. You can come to this page and you can see the rules that we use to determine how to buy the companies, determine competitive advantage. And there is a course on that as well. It's also, there's a lot of free courses. If you come here and you just click investing, go to the more advanced ones, which are, this is all being updated, this website, which are this one, which is now free. This one is also now free. And these teach you how to invest in and research companies. But my point is we're going to look at Nvidia, and we're just going to look at some of the key metrics that you would want to look at if you're going to invest in this company. So you might remember a few from that session I was referring to a few weeks ago. We did talk about how if you do look at a company and you look at, I think it's under financials here, yeah, it is. And if you go to ratios, the way we typically determine if a company has a competitive advantage or a moat that Warren Buffett always talks about, the way we look at that is we look at something called return on capital. So you'll see it here, and if we hover over it, you can see the calculation looks a bit interesting in terms of how difficult it might be. But what we wanted to show, remember, we'll make it a column chart, is a high return on capital, right? A high return on capital. Look at this. Look at this crazy return on capital. This basically means that for every dollar that Nvidia invests from now for the next 12 months, for every dollar that it has available, it will make a 60% return in 1 year. So people often ask, why do some companies grow better than, say, cash in the bank? Or why does my investment in the share market tend to grow better than bonds or property or whatever? And the reason is that companies can invest money in their business and obtain a better return than we could by putting our money in the bank. So a company, in this case, Nvidia, has been able to deploy capital in its own business to put the money, whether it's a loan from their bank or whether it's cash that they had just sitting around, They can invest it in new facilities, new technologies, and get a 60% return in 1 year. So that's how you understand why some businesses grow, like Pro Medicus or Nvidia, grow exponentially, and most companies don't. If you can identify these companies that can sustain high returns on capital for a long time, you have effectively found the secret source of investing. The key thing is, as we know, is that we needed to buy Nvidia 2 years ago or 4 years ago to get these returns. We don't know what the future may hold. So that's where research and those types of things come in. But you'll remember from that session a few weeks ago, we did talk about competitive return on capital as an indicator of competitive advantage. But the other thing that was required is not just a high return on capital. We also wanted the company to grow its revenue, because it's one thing for a company to be able to we'll put that in a line chart. It's one thing for a company to be able to make a good return, but can it keep making more of a good return? That's kind of like the second dimension to a competitive advantage. So not only can you grow, but can you be more profitable as you grow? Anyone that's worked in the corporate world will know that if your boss at your job gives you an incentive to, hey, if you do more sales in your business unit, you'll get a profit of 2% or something like this. I don't know. You'll know that incentives drive behavior. And for the most part, if someone is incentivized to just grow, like a CEO, if you go to a CEO and say, hey, Mr. or Mrs. CEO, grow this company by 10% and I'll give you $20 million, they're going to grow the company by 10%. And they're going to do it at any means necessary. They'll probably break ethical rules. They'll probably go and make an acquisition. They'll probably just do all types of stuff, sell products really cheaply, who knows what. But really, that's not good for shareholder value over time. So what Nvidia has been able to do is increase the sales. That's the black line. You can see it dramatically increasing as the AI explosion has taken off, while also increasing its profitability. And that's what would make anyone, in my mind, able to say that this company has a very strong competitive advantage, a very strong business. Another way we can look at profitability, I'll show you. I'll just get rid of this return on capital thing. Is we can look at the profit margins through time. So this is comparing just the profitability on the income statement, not necessarily comparing the total amount of capital inside the business being pushed around, but just for every new sale, how much of it is actually turning into profit. So again, that's the wrong way around. This should be a column and this should be a line. There we go. So the black line, again, you can see it in the background there, is the revenue line. And then in the front, we can see the profit margins. So the lime green, that's 72% this year. That shows you basically sales at the top, like selling designs and semiconductor, all that sort of stuff, software, hardware, etc., minus any type of direct costs. So that might be materials or whatever. 72% margins are extremely high. The other thing, the orange line that you can see is operating margins. That's once we take away things like marketing. What else have they put in here? They got stock-based compensation, R&D expenses, these types of things. We can see the operating margins. And if you're not well versed in finance, I can clear this up for you. These are probably some of the best margins in a business you will ever see in your lifetime. Not only are they great now for one singular year, which is almost impossible for most businesses to achieve anyway, but they have been very, 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 very good for a very, very, very long time. I can't think of any other businesses in the world, maybe Facebook, that has these types of margins. So Facebook, obviously, everyone hates, but it's a wonderful business. So if we can chuck a comparison in here. And what we'll do, just to make life a bit easier, is we'll remove gross profit margins and we'll just go to net margins. So here we can see Facebook's margins are incredibly good as well. And both of these businesses have something in common in that they both sell software, basically, and there's a huge network effect behind them. So the key question that comes down to it is the valuation of Nvidia. So if we go to valuation here, maybe I'll stop and ask everyone, does anyone here use the ticker terminal? That's this piece of software that we're using right now. Does anyone use ticker? If not, what else do you use if you use something? You can get a lot of people ask me after the live shows, so how do I get access to this piece of software? It's just tikr.com. There's no referral or partnership between us, but it's actually a really powerful tool. One of the things that we can do is we can compare Nvidia through time in terms of its valuation here. So this is just comparing price to sales. We can compare it to other businesses. We can go say what else? Let's go Amazon maybe. Something like this. And what we can see, so I'll do one more. You can compare across countries with like price earnings ratios, price to sale, because the reality is it doesn't really like price earnings multiples and things like that doesn't really matter. So I might actually get rid of Amazon because it's not really the same type of business, but we'll get a picture anyway. So my question to you is, Guru Focus Alpha Spread Simply Wall Street says Percy. Guru Focus says Janine. Thank you. So my question to you is, if you look at the valuations of the companies here in front of you, so to confirm, we've got Pro Medicus up the top, the black one, trading on a price to earnings ratio, a price to sales ratio, of 97 times. So that's saying the shares are valued at 97 times the annual sales. We can see Nvidia, which is the light blue line. They're trading at 21 times, and we can see Meta/Facebook is trading at 8 times, which is the one down the bottom. Of these three companies, knowing what you know about them, so even if you don't know that much about all of them, which one would you go with and why? So which company would you be inclined to invest in first? Just seeing what you can see here, but also what you know about them. So there's no right or wrong answer here. I'm just curious about which one you would choose. We haven't even looked at like the future growth prospects and that sort of stuff, or competition, those types of things. But we've just looked at basically the financials and a quick little look at valuation here. So I'm just curious. I think I might just preempt you and say something, which is that when most people see something like this, their first reaction is, and they look at Pro Medicus up the top here, their first reaction is, look how expensive Australian technology companies are versus US technology companies. And I think that's a fair observation. We need more good technology companies in Australia. We need more Pro Medicuses, WiseTechs, Objective Corps, RPM Globals, these types of businesses. But the reality is a lot of Australian tech companies get bought out before they get too big. Like just first half of this year, second half of last year, we saw Altium, which was one of the best technology companies Australia had ever seen, and that got bought out by a US company. So our technology companies tend not to grow to the heights of the US companies, and there's not as many of them, so they get bought out pretty quickly. RBT Cat, you're saying you would buy Meta. It's 8 times cheaper. Patrick, Meta. Mr. says none. Be fearful when others are greedy. Elise says Nvidia. I would say, just based on this here, I think I would, before I invested in Nvidia, I would want to look at Meta, to be honest. I think Nvidia is probably this wonderful business, but the reality is that you do pay quite a bit more for it, and it's oftentimes, a lot of people characterize investing as like you do one thing or another, and few people actually remember that you can do all of them. I'm going to show you why people think Nvidia is so valuable versus other businesses. So if we think about an industry, so this is like a funnel or something. If we think about an industry, let's put all of us up the top here. We're going to be called consumers, right? So we'll be up the top here. And there's also businesses. At the end of the day, the only two types of people or things that buy something are consumers or businesses. So if you work for a company, you might buy something, you're a business. If you go down to the bakery and you buy a bread roll, you're a consumer buying a bread roll. If you go to Nvidia, you might be a business that's buying their equipment, or if you're a consumer, you might be using some AI tool. So if we think about an industry like a funnel, right? We've got this is called downstream. Depending on how you can, we'll just phrase it as downstream, and you can have upstream. So you can have, we'll go up. We'll just put up there. Basically, what we're trying to do is, some people call this an industry vertical. So they say that there's like a vertical, like even though everyone jumps on a Virgin Australia flight to Sydney, that plane is made by Boeing. Boeing then sources its products from 10 different companies. Those companies then require steel, which they get from a steel mill in China. That steel mill in China gets its iron ore from Australia. In Australia, they dig it out of the ground, and so on. So that would be an industry vertical. You can see how an industry goes from someone jumping on a plane right through to digging something out of the ground. In the case of AI, right, here's how I think about it. At the very top, we have things like Chat GPT, right? This is brought out by OpenAI. We'll go, that's not good, Owen. So Chat GPT. We have Google Gemini. So we have Gemini by Google. We have Perplexity. We have the Meta, so Facebook's AI. We have all different types of products, right? They're right up there. And there's quite a few of these different AI bots and different widgets and all that sort of stuff. But then if we drop down a level, we have the cloud computing companies. So these would be like cloud computing. This would be like Google GCP. So this would be GCP. Geez, that's not good. We have AWS from Amazon. AWS, Jesus, my writing's getting worse. We have Microsoft Azure, which is another cloud technology. But then we have like adjacent businesses in here. We might have like the actual locations of where the server farms go. So this might be things like NextDC here in Australia, AirTrunk, that sort of thing. So this is meant to be an X. NextDC is actually an Australian company. So this is NextDC, and you can see the share price over time here. So this is kind of like the property that the server farms go in that fuel the AI. But then further down here, we basically have Nvidia, right? So Nvidia probably sits about here. It's designing chips. It's people can use its software to write its AI technology and stuff like that. If we come down again, we have another company called ASML. This is a company from the Netherlands that is the only company in the world that does lithography machines. So basically, light is shot through this little kind of crystal thing that turns into a laser that then puts the chip on the board. It's quite confusing, but that's probably my crude way of explaining it. So there's only one of these companies. Even though Nvidia exists, there's like AMD and there's a bunch of there's Intel and different companies, but none of them are as good as Nvidia. So there's probably like one of three of these companies. There's only one of these companies. And even though this company's probably not in the right spot, but TSMC, this is probably one of the most strategically valuable companies in the world. There's probably only one of, being generous, two companies that can do what TSMC does. So TSMC is this company here. They actually make the chips. So they make the semiconductors. And the thing about this company is it's located in Taiwan, which China wants to control, the USA wants to control, and virtually every country in the world wants to control this company because it has by far the most advanced technology in the world. Intel is trying to do its own thing, and you can see how that's gone. So if you think about the industry vertical and the business generally speaking, you can see why the further you go down, the more valuable and monopolistic these companies become. Nvidia is at this sweet spot where it's the number one game in town for all of the biggest customers in the world, which are like Google, Amazon, Alphabet, Microsoft, etc. And at the same time, it still requires other businesses to function in this industry, but it doesn't compete against them. It's more complementary to them. Whereas if we look at a business like Meta, which controls like social media, it's moving rapidly into AI, so I think it's underrated. But and if we look at like Google, Amazon, Microsoft, there are alternatives to these businesses. So in the AI vertical, Nvidia is very unique. It's very unique in that what it does is extremely valuable because it's like software. Pardon me, it's like the software that's up here, right? But at the same time, it doesn't have to manufacture everything like ASML or TSMC, and it definitely doesn't have the geographical risk like TSMC does. So it's in this sweet spot in the industry, in the vertical, where it's so valuable. So to say that this company is valuable is like an understatement, and that's why you see its profit margins and what it does. And that's how you kind of understand this industry as a whole. Now, we're coming towards the end of the show I wanted to put this here because now my question becomes, well, we know it's expensive, we know it's valuable, we know all those things, Owen. So should we put it in our Rask Invest Live portfolio? Before we do that, I want us to quickly have a look at the FANG Plus ETF from GlobalX. Now, full disclosure, FANG is GlobalX, I should say, not FANG. GlobalX is a long-term sponsor of RAS Podcast. It bought a company called ETF Securities a few years ago. They've actually been a sponsor of our podcast, like an advertising sponsor, for over 5 years now. So I'm not paid in any way to say what I'm about to say. I'm just talking generally, and that's a full disclosure for you so you understand. The way RAS conducts itself is that our partners are on long-term agreements. It's the only way we conduct ourselves to build more transparency into how we operate. But if we go into the FANG ETF's holdings, it owns only 10 shares. And Tim made the comment before that he just buys FANG and a few other things rather than trying to buy Nvidia. He just buys an ETF which holds Nvidia, saves in the paperwork and all that sort of stuff. So if you buy into this ETF, 10% of your investment, because of the current holdings, you can see it right here, or 11%, is in Nvidia anyway. You also get CrowdStrike, which was that cybersecurity company that had that global outage the other day. You get quite a chunk of Netflix, to be honest. You get ServiceNow, which is more like an automation platform. Broadcom, you get, which not as interesting. You get Amazon, you get Meta, Alphabet / Google, Apple, and Microsoft. So you get these global tech companies. You don't have to do any of the nitty-gritty into which one's going to win the AI race because you've got kind of all of them. Even if ChatGPT and OpenAI / Microsoft wins, well, you've still got about 9% in Microsoft. But if Nvidia becomes far more valuable, you got Nvidia as well. Sure, you might say there's something else here that might be valuable. So you could go and buy an ETF like NASDAQ 100. You could go and buy an ETF like this, the Beta Shares NASDAQ 100 ETF, which I think is their most popular ETF. They are also a partner, advertising partner on RAS Network. But you can see here, you've also got Nvidia, Apple, Microsoft, Amazon, Broadcom, Meta, but you've got about 100 and whatever other shares in there, and the weightings are obviously very different. So then you go, okay, well, what's the downside of owning one of these ETFs? Well, the downside is that you're going to get the winners, but you're also going to get some losers. And the way I think about what an ETF does is, a lot of people say, oh, I'd rather watch the grass grow than buy an ETF. Well, those are the types of people that probably won't ever understand this. But if you think about it, if you own the world's best stock and this is your return over time, right? You could also own the world's worst stock and it might look something like this. But if you diversify, what you're basically saying, if you own like a diversified, like just a simple ETF, what you're saying is you'll never get the best return, but you'll never probably get the worst return because you're diversified. You might get something instead that's like this. If you hold long enough and it's a good ETF, you're probably going to get a return somewhere in this green area. So you might miss out on this little bit, but you're avoiding this little bit. so that anytime someone goes to you at a cocktail party, who goes to cocktail parties, honestly? But if anyone at a cocktail party goes, well, I own Nvidia, you can be like, well, I also own Nvidia. I just own it as part of my ETF. And then that person that also owns Nvidia will probably say, oh, yes, well, I also own Peloton. And then you'll be like, Peloton? And then you'll look it up. It's not ASX. You go like this. You'll be like, Peloton? And you'll be like, oh, you mean that thing that's down like 99% since it's COVID high? Well, I own that, but it's only a tiny, tiny, tiny little bit of my ETF, whereas they're all the way down here. So the benefit of owning an ETF is, yes, you don't get the massive, massive individual stock winner, but you do get a very good exposure to a whole industry. So if we look at the NDQ ETF or even the FANG Plus ETF, FANG, that's not an F, that's close, FANG Plus, right? Basically what you're saying with FANG Plus and NDQ, with FANG Plus is you're kind of saying, I don't pick Nvidia, I pick this, like this much. And then with the NDQ ETF, you're basically saying it's not quite what I'm about to show you, but you're basically saying, I'll take this a little bit more, right? That's basically what you're getting. And so that's why it makes sense to consider an ETF at least, or put the ETF in a portfolio and then put the other individual companies around the outside if you can. Mr. Leftover, you say, but people at cocktail parties will never talk about their Pelotons, but will always hype their Nvidias. Yes, they will. Does FANG rebalance? Yes, it does, Tired Steve. They all ETFs rebalance. But this one rebalances, and they recently, like in the very beginning, it had Twitter in it, for example, and Twitter got removed and Microsoft got added. It's a bit of an odd ETF because it's odd, but a good ETF, the FANG Plus ETF, because this is NDQ. It's interesting because I was chatting to Mark from Globex the other day on the podcast, and a lot of people put FANG in their core as like a core holding to just technology companies, like alongside NDQ or alongside IVV or VGS or something like that. But then a lot of people also use it for a little tilt on a portfolio, like 5% in this or 3% extra or something like that. So it kind of can go in either part of a portfolio, which makes it kind of interesting. Same with NDQ. NDQ's got a big tech focus, even though it's got 100 stocks. It's quite interesting in that regard. So people use them kind of both tactically and as a core holding, and their fees aren't that high. I mean, they could be lower. Let's be honest, we all want lower fees, but it's not that bad. So my question is to you as we come to the end. We haven't even got to this. Maybe we'll do this next week. And this is we've got the portfolio. We've got our portfolio here spun up. So we currently have our portfolio is currently worth 900, or maybe I'll zoom in a bit, a little bit more, is currently worth $998,000. That's our fake Navexa dollars that we've got. So we can see the entire portfolio is worth just under $1 million. So we're underwater a little bit. I haven't put in the dividends yet. So my question to you is, if we're going to allocate some of our capital to FANG or to Nvidia, how much would you put in? And just tell me that. How much would you put in each, or would you go with neither of them? I'm curious. Please let me know in the chat right now, and I will quickly confirm these dividends. This will affect our overall return because these have not been confirmed. WiseTech, we got paid that dividend. Yeah, we did. We got $5. Woo! We got, what else we got in here? Go back. Where are we? No, where am I? Portfolio. Here we go. Nope. Here. And we go down here. We got some bond income. Oh, yeah. So, cool. Done. Now, if we go back to the portfolio, now we can see, we're still underwater. God dang it. But what do you think? So, Janine, you're saying 80% FANG, 20% NVIDIA, 50-50. So you're saying 50-50, says RBT. So, okay. So we've got a lot of dry powder here. We can see that we allocated about 10% of our portfolio to the Aussie bonds. We've still got the other 840 grand in cash. So why don't we do what we did then? If you're saying that, why don't we do what we did with WiseTech and start with a smaller allocation to Nvidia, knowing that we could top up when it gets a pullback. Caroline saying 3/4 FANG, 1/4 Nvidia. Paul's saying 70-30 FANG, Nvidia. Yeah, so you're all kind of going with core and satellite approach, which is great to see. So why don't we say, if we've got 50 grand to allocate right now, why don't we say 10 grand Nvidia, and 40 grand FANG. Let's chuck that in. Obviously, we're just having a bit of fun here because we all know this. So this is not financial advice of what you should do with your portfolio and blah, 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 blah. So we're saying 40 grand in this. So if I just do very rough calculation, 20.71, so that's about 1,393 units of this, which gives us about 40 grand. So we won't put brokerage costs in. Adding FANG position, 7 November, like that. And then what we will do, add another holding, we will add Nvidia, and we will go, price is that $145. This is the conversion rate. So I don't know if that's USD. Yeah, it's USD. Just want to make sure of this. So I will add these to the portfolio now, and then you'll see them reflected on the RAS site. Yeah, so these are in US dollars because I'm going to have to make room for this. So 145 USD to AUD is 220 Australian dollars. So if we're putting 10 grand in, we get 45. That will give us about $10,000 worth. So pop that in. And now what we've got to do is we've got to go to the portfolio and we've got to fake sell some of this. So we've got to add a trade. We've got to sell a little bit of our cash holding. We've got to sell about 50 grand's worth to make our numbers balance, which is about 997. There we go. So we can add this trade. And now we've effectively taken some of our cash in our fake portfolio and we've invested it in Nvidia and into FANG. So we can see the holdings here and you will be able to track them. I don't know how quickly it gets over to the RAS Media website, but it will get over here soon. There we go. So it's already in here. We can see that they're starting to be tracked in here. Now, this is not perfect. Obviously, we just did an instant transaction in Navexa, which is a tax reporting tool. Realistically, we'd have brokerage, we'd have capital gains tax to pay on the AAA potentially. There's a whole heap of stuff. The trade wouldn't go through straight away, et cetera, et cetera, et cetera, et cetera. But we're just having a bit of fun here. So you get the idea. Graham said, I think small to start with Nvidia is smart. Agree with Fang too. Thank you. Julie, you said, do you think Nvidia is likely to experience a dip after they report later this month? Market seems to punish these types of stocks when they don't over deliver. I would agree, Julie, given the valuation. I don't know what's going to happen, to be honest, but I would say that, if we look at the portfolio here, we've got this wonderful little technology company called XRF Scientific. We started with a really small shareholding, knowing that it's probably going to be volatile. WiseTech, same thing. We should have topped up, but we didn't. It's my bad. Wes Farmers, we should have topped up, but we didn't. We start with these smaller positions and we build over time. Now, just final thing to reconfirm. This is not a real portfolio that I am tracking with real dollars. And so I don't want you to do that either. If you want to see how we invest, you can go to the Rask Invest website. You can actually see our portfolios. We'd have them on display. And you can actually see, what I'm invested in. But this is a really good exercise because over the next year, remember our goal with this portfolio is over the first year, we build it together and then we set it free into the wild. And then we'll start again next year with another portfolio and we'll just see how they go over time. We'll track them together and we'll recap. I know that I think it was Percy was a little bit, not annoyed, but Percy wanted to see Costco in here. So we should probably revisit Costco, putting that in here as well. How has Costco gone recently? Let's have a look over the last little while. It's done well. So we've probably missed out on some upside there. But anyway, I'm going over time. So we've got to still cover Solpats and we've got to cover gold. The gold ETFs are great. or portfolio diversification. That's what you want, particularly in retirement. It doesn't provide income, but it does do some other things. I wanted to just quickly call out some other things as we recap today's show and end. Rask is going through this huge transformation. So you can come to our websites at the moment. You can see some things are changing pretty quickly, and there's probably some broken links in there somewhere. But as we roll on, I just wanted to keep you updated with what we're doing. So phase 1 has already begun, and that's with the new redesign of the websites and everything that we're doing. If you have any feedback for me, you can just jump into the community anytime you like. And I've been getting some amazing feedback there. So thank you so much to everyone that's helping us out and wanting to help RAS succeed. I really appreciate that. We've launched a new service which you will be able to access on our website soon, which will allow you to book in with someone in our team who is experienced and can help you. It's a free call, and you can book in to see if, based on what you need, financial advice, accounting, all of that stuff is what you want, or even if to help you pick a course to study, like one of our courses. We're going to bring out more courses, but we're just trying to get more involved and help people. So you can check that out. That'll be available on the RAS website soon, and you'll see things on like the education website. When you come here, a lot of people have analysis paralysis. They have a look at our website, like, oh, which course do I start with? So we may be able to help with that. We've also introduced money coaching, which is available on our website. This is not something that Rask provides. It's something that we do, and we help you get matched to a money coach. We've also recently we've made a partnership for accounting. So the guys that I use for my business accounting, and now my actual accounting, Grayspace Advisory, are now trying to specialize more and more in accounting for investors. So they would use things like Navexa and that sort of stuff to help you do that. So that's the Grayspace team. What else are we working on? We're going to revamp our RAS Core membership. So if you're already in that, we've already revamped our Rask Invest platform. So for those of you that don't know, this is what it looks like on the inside. So you can log in and you can see performance and all that sort of stuff. You can see fees and all the things that you might pay to us. You can see the individual shareholdings that you have that we manage on your behalf and so on. What else? Phase 2, we're going to bring more calculators to the market. We're going to hopefully bring in some new ways to get financial advice. We're going to add some new courses. We're going to add an investing strategy for kids. That might be later this month / early next. We've got to have some changes on the podcast, which we'll introduce you to, and there's a lot more to come. I won't bore you to death. But you can get heaps of extras in the show notes and in the YouTube description. So below the videos on the RAS network, you'll always find links like this. My wife and I started using Pocketsmith in a big way. So the Pocketsmith platform allows you to track your budget and do all that sort of stuff. When we were waiting for our mortgage refinancing to go through before we started using it, and that's all done now. And this is insanely powerful, forecasting things like your net wealth, things like your budgets, your incomes, everything. It is insane how powerful Pocketsmith is. I'm so happy that we partnered with them, and you can get a discount. Really, really powerful thing. It's blown me away. So even my wife was like, this is not a tool for beginners. It is. I mean, you can be a beginner, but she's like, there's so much to it. It's really powerful. So check that out. Tim Branson, not going hard into Bitcoin at all-time highs after the election. Nah, mate. Nah. Oh, Joel, you said, hey, Owen, the current holdings aren't showing on the website under Jupiter, etc. Yes, that's because the new change hasn't rolled through on the public site. So I'll show you. There is another way you can go there, Joel. I'll just put the link in the show notes now. So there is this. The old website is still available at invest.rask.com.au. So you can still go there, and you can still go down to asset allocation. Click here. You can see the holdings. I'll zoom in. You can still see the holdings, and you can see what the allocation is. All of this stuff is being added to the new version of the website, which is available, which is very, very pretty and very professional, which is being added here. So just so you know, So that's all being added here in the next, hopefully in the next 24 or 48 hours. So that's all there. Gosh, I hate this photo of myself. I really don't like myself in a suit. But one of the things that we added was more like, how do you make a decision of which strategy to go with? So that's all available there. Anyway, I won't bore you to death with that. New site looks awesome. Thanks, Joel. We've had some amazing feedback. Still some improvement we need to do, but Sophie, who's our head of design, I hope she's very proud, because it is something to be proud of. It's really wonderful. But there's heaps coming, and I'm really, really excited by what comes next in terms of what we can offer for free, and what we can do to help improve the Australian investment ecosystem. If you're a financial advisor watching this, or you're an accountant, or you're a lawyer, even if you're just a dedicated DIYer of your finances and you think you can help us build more free courses, just help in some way, to give more education to more people, like, reach out to us, because we really want to help. We've got terrific partners like Pearl and Avexa, Pocket Smith. All of these partners are helping us in bring more content and more tools. But that alone is not enough. We need people to help us actually build courses. We've had some fantastic people reach out and try and help us to get more of our education into schools, which is definitely going to be something that's on our agenda for 2025. But if you can help in any way, that'd be fantastic. So thank you, everyone. It's so lovely to have you here. Next week, we'll be back. We've got Alex Luck, financial advisor. He's coming on to answer your questions. So Alex will be joining us live next Thursday. And then we'll also do the gold thing. We'll finally get it done. We'll do the gold thing. So we'll say goodbye to Alex after 45 minutes. Say thanks for your insights, Alex. It's been great. See you later, alligator. And then we'll spend 15 minutes on gold ETFs for the portfolio. The other thing to mention is that the following week, we're doing an Investing for Kids episode with author Anna Crisina. She's the author of Kids Ain't Cheap and the Get Rich Slow Club podcast with Tasha Eisman. I always get it wrong. Etchman, that's the one. So she will be on talking about how to invest for kids and how to prepare for maternity leave, or even if you're a grandparent, investing for kids, all that sort of stuff. So that is Thursday week. Next week is financial advisor, and I love the horror stories that we did last fortnight, the Collins Street nightmare. So we'll be doing more of that now. But thanks for everything this week, and I will be back next week. I'll see you same place, same time next Thursday at midday.